Hey guys, Dan Lucchesi here with the Lucchesi Property Group, and I wanted to share the July market update. And we're going to be looking at some of the June market data. And what a crazy first half of the year that it's been. COVID has obviously had a big impact on our culture, on our economy, and it's had a big impact on the real estate market, although probably not the impact that a lot of people might have imagined it would have. It's actually been a really, really strong real estate market. And, you know, I've seen some funny memes about realtors talking about how good the market is while the globe is burning up. And the reality of it is we don't create the market. We're just reporting what's there. And the fact is it's a very hot seller's market right now. And I'll share some data to support that. So, active inventory declined month over month by 16.4%, which is down from the same month. That's month over month. And then it's also down from the same month 1 year ago by 35.5%. So we literally have more than, we have about two-thirds, a little less than two-thirds of the homes that we did last June. And we know that supply and demand runs opposite one another. So supply is down 35%, and we all understand the basics of supply and demand economics. Well, right now, contracts accepted or demand is and pending sales is up. It actually increased by 7.2% again, and that's month over month. And then from the same month of June back in 2019, we're up 18.8%. So we have only two-thirds of the inventory and almost 20% more contracts being written. So demand is down, supply is down, demand is up, and that's going to put pressure on the pricing. It's going to cause prices to go up and buyers to compete, and it's that simple. Closed units is up 7.1% from June 2019. The median days on market decreased from May to June. It already decreased from April to May, and then it went down from May to June, coming in at 7 median days to contract, meaning the median number of days a house is on the market in our market is 1 week. So that's pretty incredible, guys. So flash sales are those contracts that went under contract in 1 week, and there's about a 30-day closing period for most transactions. So the ones that went under contract in May closed in June, and of those, 51.4% went under contract in 1 week or less. And here's a pretty important number. 26.9% of closed transactions sold for full price. 26.9% sold for full price. And on top of that, another 35.6% sold for over the asking price. That's a total of 62.5% that sold at or above the asking price. So, guys, it is without question a seller's market. If you were hoping to have the, kind of wait and have the market go down, that may work. You may be waiting a while. I think before we see any foreclosures or pre-foreclosures or short sales as a result of people that are struggling financially and maybe falling behind on their mortgage payments, I don't think we're going to see that impact for at least 12 months, just understanding the time cycle that goes into a foreclosure. It's not going to be instantaneous. If it's a year out and you can wait and it does happen, great. It might benefit you. But that may not have as big of an impact on the market as you might hope. And so you may end up waiting for nothing. And what I do know about real estate is that when you become a homeowner and when you start building equity and putting that money back in your own pocket, in the scale of 20 years or even 15 years, and certainly 30 years, the market goes up. It doesn't it goes up and down, but long-term trend, it's always going up. And so it has a bigger impact on your financial future the earlier that you invest in real estate or buy your first home than it does trying to time the market. I never advise my clients to try to time the market. If you're planning to hold long term, just get on the train and stay on the train. That's the way to go, guys.